Good afternoon, everyone, and thank you very much for joining me. This is the non-farm payroll live trade. My name is Russell Shaw. I'm a senior market specialist at FXCM. Here's my email address, rshaw@fxcm.com. Today is the 4th of June, 2021. I'll just bring up our high-risk investment warning, and I'll keep this on screen for a few moments. And we've got 6 minutes before the announcement comes out, so we'll just run through a few things that we're going to be looking for in terms of the trade. Here is our market commentaries disclaimer. Okay, and our references. So we'll look at TradingView and Forex Factory, and you can see that we're getting ready to update all the non-farm details for Canada and the US, etc. We'll be focusing on the US. There is a forecast of 645,000, which is considerably more than the disappointment of 266,000 from our previous NFP. We'll keep an eye on the unemployment rate, see if it's dips below that 6%. And I want to keep an eye on this as well, average hourly earnings. And there's a reason for that. Hey Sam, Howard, good afternoon to you and to everyone. I wasn't cancelled, Howard. Load shedding, unfortunately. So just my apologies there. Hey Jan. All right, so let's just pop through to this chart over here. All right, so we're looking at the 1 hour US 10-year, and you can see that there was a big spike up yesterday. This is going to be a very interesting chart in terms of the reaction after the non-farm payrolls. And if it spikes up, okay, I would expect dollar support there. It would probably be indicative of a good non-farm payrolls. The market is desperately trying to ascertain whether there is inflationary forces or not, and I think that the non-farm payroll is going to play into that today. So we'll keep an eye out on that. We won't put on a trade before the announcement. We'll put on a trade only after. And the way that we will trade it is we'll wait for, so we'll trade the euro US dollar, just to let you know. So we'll wait for the first movement. Either it's going to be pro euro, okay, or it will be pro US dollar. We're going to wait for some sort of pullback. And then we're going to try and catch the next impulse move and hope it goes in this similar direction to the first initial impulse. We'll also try and see what makes sense fundamentally, whether one should be long or short US dollar based on the yield movement. Targets would be targets 20 pips. Okay, that's our profit target. Stop loss 20 pips. Okay, so 1 for 1. We'll go for a 1 for 1. So if we manage to achieve any of these, that would be within acceptable ranges. And then what we're going to do is we're going to also try and trail the stop. And I think this is where a lot of the emphasis on this live trade is going to be on trading the stop. So if we do get stopped out, the idea is that we get stopped out under 20 pips. So that's also going to be a something to just keep an eye out for. Now, let's just go back through to our numbers here. We've got 2 minutes to go, and This is going to be the screen that we're watching. So we've got an hourly on our left, euro US dollar, and we've got a 1 minute on the right hand. Once we enter, we're going to be focusing completely on the 1 minute, and we'll see how the initial impulse goes depending on the data. And just want to do a very quick, can you see the screen fine and you can hear me okay? I'm assuming that's all good. Nobody has said otherwise, so I'm going to just assume we all are good to go. Okay, thanks, Indran. All right, perfect. So just remember the emphasis, the market really wants to know if there's going to be inflation. That's the idea. We'll see what the non-farm payroll yields, and that's going to be in 30 seconds time. In 30 seconds time, 25 now. We'll see what happens if there's some sort of initial spike. You can already see prior to the release, the euro being sold down. So there is a distinct pre-positioning in terms of dollar strength. All right, here we go. All right, let's see, here we go. All right, so euro is getting massively bid up at the moment. Wow, look at that go. All right, so whatever's been released is certainly not favorable to US dollar. Let's see if we can get some info. Okay, still waiting for that to come through. Payroll is 559,000. Consensus was 671. So I've got 559 versus 671. That's still coming through. So over here, non-farm payrolls, you can see the forecast was 645. It came through at 559. But that's not all the information. So we're going to have to come back here. Let's take a look at the yield. All right, so here you can see that the yield's getting pushed down. Okay. So there's the initial reaction on the yield. Now, let's just understand, this is an inflation adjustment that's working itself in. In other words, the market is looking for clues. When is the Fed going to start its deceleration of stimulus? When's it going to start its tapering? Okay, so the miss. Okay, the miss in terms of our numbers today, well, the market has started an immediate discounting of that, and that just want to get this, and that is showing a push down in yield, and that push down in yield, that is bearish for the dollar. It's bearish for the dollar. Let's take a look at the dollar again. All right, so there we can see that euro is really, look at this, massive move up here. So we're going to try and catch some sort of pullback, and we want to try go in the direction of the initial impulse. We haven't put in a trade just yet, but we don't have all the information just yet. All right, I'm just seeing if I can get more information. You really see that the yield here is starting to be faded. All right, let's just let me just get this up and running. Never believe the ADP. So we had a massive beat on the ADP, which is small companies. Unemployment rate came in at 5.8. Yeah, there we go. Came in at 5.8. Okay. Now this number here, I think, is key. Let's just see if we can get that. We'll come back to that in a moment. Let's take a look at price action. All right, so it's hit the central pivot. So maybe the central pivot's acting as some sort of resistance that may give us an entry here. Let's see if we can build an entry in. Okay, so I've got a big impulse move up. Now we're looking for some sort of pullback. Okay, let's see if the market sort of cooperates with that. Frank says average hourly earnings coming in at 0.5%. Okay. Thank you very much for that, Frank. Well, that would be, let's see, still no. Okay, 0.5%, better than that forecast, but less than the previous. Okay, yield here is getting faded awfully fast. Okay, let's see if we can get that pullback. Yeah, here it's starting. Let's see if we can take advantage of a pullback here. I'm still here. If I go silent, it's just because I'm just taking a look at the price action. Okay. All right, so now I'm looking for what we call a reference candle reversal. The reference candles are more important on the high time frames, very erratic on the 1 minute, but that's how we're going to try and time our entry in here. See if we can get in. It's interesting just to see how the central pivot has acted as absolute resistance, hasn't it? And the yield's actually pushed positive. All right, let's just go back here. Must be something wrong with the feed. Okay, yield actually turned positive there. Interesting. Okay, so now I'm looking for a close. So here's what we call a reference candle. It's got the lowest low, and we're just trying to find an entry point here. No entries just yet. All right, let's just see if there is some support that's coming in here. Okay, so this is the reference candle, the lowest low. Let's just see if it maintains. Okay, I'm looking for a close above this line here. Okay, there we go. All right, let's go ahead. I think we can put on that trade. So we want to put it in at minus 20 pips. Put on the limit, 20 pips. All right, so we've gone live now. This is a live trade. Let's pop this open. We're on the minute. Now, yeah, here's our limit 20 pips up. Here's our stop 20 pips down. Okay, so we're going to now the way we're going to proceed forward is we're going to start trying to manage the stop loss. Okay, so in other words, we want to try and move the stop loss above the 20 pips if we can. Let's just see if we get the opportunity. Okay, let's move it there. All right, just need price to stop moving up, and then we can start moving the stop loss towards the last sort of trough over here. But not yet. Just need a bit more strength on the buyer side before we can move the stop loss. Let's take a look at this yield. This yield's a bit of a worry. Okay, still looking for some strength on the buying side. We can't move the stop at all until we get some strength up here, and just want to keep track of this. All right, so it's slowed down quite remarkably. All right, so just want to keep an eye on this yield over here. It's very a-directional, isn't it? All the bears lost control at this side, all the bulls lost control over here. We're effectively flat on the yield. obviously some sort of resistance here. Okay, there we go. Just a little bit more. Indran's just writing, with the NFE, with the NFP being below forecast, this should be a bit of a negative, which should show an increase in the yield. So I think that let's just take a look at the numbers again here. I think that the numbers here are I don't think they are blowout numbers, but they're not totally bearish either. So the yield, I guess the initial movement in the yield was because it missed forecast. But then as Frank came in, he did say there is some hourly earnings sort of pressures, better than forecast, but it's less than last month. And last month was a terrible report. So I think the market's just trying to digest if this is in fact a good number or not. Just go back to our, or does that make sense? In other words, the inflationary pressures, not blowout inflationary pressures there. I don't think we should see the yield jump on these numbers. Okay, we're going to start moving the stop loss up now. All right, so at least if we get stopped out, it's going to be a stop that is above our 20. I've left it. So I think, I'm not sure what I said there. It's going to be below our 20 pips. If we get stopped out, I've left it under the last area of support. So I've given it some breathing space here. So if price does come back, what I'm hoping for is that the support level holds here and we don't get stopped out. But if we do get stopped out, well, you know, we're going to get stopped out is very, very low. We'll get stopped out at about 9. Modern Seller says the volume is low. I don't think so. I mean, the volume's there. The volatility is perhaps kind of not quite what we wanted. It's grinding its way towards the take profit, and if it pulls back, kind of like that and moves kind of like that, then we can move the stop loss into this area, and at least then we're guaranteed a profit. So now it's all about stop loss management, and we'll see if that's going to yield some positivity for us. It's all about the market cooperating now. Okay, let's take these ones out. All right, let's take these ones out. Just a little bit more bullish hour here would be much appreciated. Now, something else to keep an eye on is, of course, we've got a crossover on the stochastic. Now, I can see we're on the 1 minute. So we're so close to the tip that price is extremely random at the moment. But the stochastic is, in my opinion, the best momentum indicator around. You can join us on our webinars daily, and I'll explain why the formula here is, it's really a very clever formula that Ortland put together. If we can just get the stochastic into an above 80 and hold, that would be a good sign for the trade. Okay, that would be a really good sign for the trade if we can get here. Is the job report more important than the unemployment rate? I tell you, George, the unemployment rate and the job report are actually lagging numbers. For me, what's more important is the initial jobless claims, and those initial jobless claims were actually a really good number. So I think by and large, we're doing okay. I think we're doing okay. Let's just give this, we're almost there. Fred, we started this with a 1433. It's actually a 1555. I found that it was less I guess sensitive, maybe is that the right, without really taking too much away from the 1433. So I think that Thursday's number ultimately, George, I think has a, I think it is the more powerful number because it's trend. I think ultimately we're heading towards getting the slack out of the market. That's really what the Fed wants. This jobs report, I don't think this NFP has convinced them that slack is, vanishing at a rapid rate. But I think that we can. Nice, Marinsetta, beautiful. Take profit hit. But I think that the idea here is we are certainly moving towards an economy that has less slack. Does that make sense, George? I hope it makes sense. I want to move my stop loss up. All right, so we guaranteed profit now. So my stop loss is above the entry point. Is nothing close to our target. I mean, it's only 3 pips, but we can't lose. Okay, so we now guaranteed profit. We just want to see if we can get this last little bit over here. And you can see that the resistance is right here. That's what we're fighting with at the moment. All right, I just want to take this. I want to close above this guy. If we can close above this guy, I'm moving the stop loss just below there. But I wanted to close above this candle here. There we go. All right, so I've just moved my stop again further into profit. We're almost there. So close yet so far. There we go. There we go. There's our 20. There's our 20. So I think that that was a good. They don't always work out like that. Sometimes they work out much worse, and it's hard because there's an audience watching. But this one we were fortunate, so it hit the 20. Alrighty, and you know, the idea here, I think that just how the stop loss was kind of trailed up. I hope that kind of you guys found useful as well. At this stage, I think we can say, just before we say anything, let's just take a look at the yield. All right, so yield now starting to come down. Okay, so I think the market overall probably getting a little bit disappointed as they start digesting these numbers. But I think that Thursday's number is the initial jobless claims. If we just go back, I just want to show you guys Thursday's initial jobless claims, which is this one over here. So we're under 400. You know, it's still, unfortunately, it's still high, but you take a look at the histogram here, and you can see that we're trending in the right direction. And the initial unemployment claims tends to be a leading indicator, whereas the data actually that we get, although it's the most hotly anticipated sort of data of the month, it's actually lagging. It's lagging, right? So nevertheless, I do think that the economy does seem to be heading in the right direction. No doubt that this jobs report was way better than the disappointment of the last jobs report. We're going to conclude here. Let's just say, would it be fair to say when trading the stock that you like to wait at least 4 bars on the M1 to see any support or resistance? That's not quite what I'm looking for, Frank. So what I was looking for, just going back, is I'm looking specifically for higher troughs to form. I'm not really counting the bars themselves, but when I get a sort of a higher trough, and then I see that the next bar is a strong bullish bar, that's kind of when I'll move it up. I won't wait necessarily 4 bars, but the idea is kind of a pattern similar to something like this. So if I can get a pattern like this where we have a higher trough, but the candle to the right of it has closed above that sort of reference candle's high, you know, that's what I'm looking forward, looking to. And then what I'll tend to do is I'll just take a look to the left just to see if there's any sort of other hurdles that I think need to be cleared. But once it clears those hurdles, I'll start trading up fairly aggressively. Does that help there, Frank? Okay, cool. At this stage, I think we'll wrap up. I just want to just sort of give a heads up that we do 3 webinars every day. We do a DAX, London, and US Open. The London Open's is sort of a misnomer, but nevertheless, you can find the details on our webpage. If you don't know where to look, you guys just send me an email, and this is my email address. All right, arthur@fxcm.com, and happy to take your emails. Thank you very much for joining me. Keep an eye out for next month. We'll do it all again then. Thank you very much, guys, and speak to you all soon.